Well, turning now to how Wall Street is or isn't digesting this surge, I'm joined by Bloomberg Markets reporter Kriti Gupta. Kriti, it's always good to see you. Investors, are they ultimately brushing off this surge in cases and in hospitalizations? We've seen just a surge in markets this week.
Well, on the surface, it kind of looks like that because, of course, like Drew said, you're having this kind of scary numbers really pop out from all over the country. Yet, like you mentioned, markets are surging. And it's once again this real tug of war for investors between that vaccine optimism and that virus risk. And this is really a lot of emphasis has been put on this vaccine optimism. A lot of people have been waiting for it. You're going to see it again when that Moderna news officially comes out and we start to see what the efficacy rate of that is as well as other vaccine candidates rolling out as well. So you really are seeing such a lead up to that. And that's why you saw such a rally in Monday's trading, really gaining all across markets. But once again, the virus risk tends to come back into markets. So that's why you're seeing maybe a little bit of a pullback today.
A little bit of a pullback, but it doesn't make up for the surge that we saw earlier this week in the wake of that Pfizer news. And what I find so fascinating about this is here we are Thursday. It seems sort of like a world away because there have been hundreds of thousands of new cases in the United States since Monday. Record cases in all parts of the country and parts of the world and several parts of the world as well. And then in addition to that, we're also seeing news from New York State about lockdowns and other measures that governments are taking. How is that being priced in? Are investors sort of shrugging that off, that these are going to be temporary and they're not going to have the economic impact that we saw back in the spring?
Sure. Well, on the surface, it does look like that because you're looking at the benchmarks, the major S&P 500, your Nasdaq, the folks that are really diving into the stock market as a whole. It does look like that. But when you actually look under the hood, look at what's outperforming here. It's tech that's really leading the gains once again. So even though on the surface it looks like, well, maybe we're not pulling back as much, it's because tech is really kind of holding the broader market up. And that's a really interesting dynamic that we kind of played with this year.
Yeah, it's wild. I was going to say we could have been having this conversation over the summer. I mean, how is this different?
We absolutely could. And it's once again coming back to this tug of war idea. A big part of the first half of this year when we saw those cases surge, when we saw New York City and really the whole country go into lockdown, and arguably in the South as well over the summer, you saw this major surge into tech, which of course makes up a good chunk of the S&P 500 and the Nasdaq. But then when you pull back and you see vaccine news, vaccine optimism, it's those other names, those value names, those cyclical names. And for our viewers who don't know what that is, that's really those companies that have more to do with kind of on the ground movement. The value is really in their equipment, in their drilling, in their physical presence, and has to do a lot more with how consumers are moving, walking around, talking, those kind of things, as opposed to tech, which is really more of a larger, broader, exposed to really all around the world.
Right, the stark opposite of the stay-at-home trade, for example. What are specific names that you're keeping an eye on today?
Well, the ones I really want to keep an eye on big tech, because even yesterday, after you saw this monster rally in Monday and Tuesday, Wednesday was really that turnaround story where you started to see the likes of Facebook, Amazon, Google, Microsoft, and I'm missing one, but I can't remember what it is really leading the gains once again. So you want to see if that momentum is really, really holding, and those are the names I have my eye on.
Any political headlines that you're keeping an eye on right now that, you know, we talk a lot about how investors, they don't like uncertainty. And one thing that we've seen play out over the last week is this idea of gridlock is good. Republicans maintaining control of the Senate, President-elect Joe Biden is going to be taking office on January 20th, whether President Trump likes it or not. What could derail the markets politically?
Absolutely. Well, in the short term, it's really all about that stimulus deal. That's really what was being priced in ahead of the election. That's what markets are going to be looking at now.
So are they looking at one happening in the next couple of months? Or are they pricing in one not happening? Because it doesn't seem like the president is doing anything right now and Congress isn't doing anything.
Right. But it's going to be the idea of what does a blue wave mean. And you still have those runoff races over in Georgia. So the blue wave idea is still in question. So if not a stimulus bill now, while we still have a President Trump in office right now, then what does a blue wave look like in January after January 20th?
All right, there it is. Bloomberg Markets reporter Kriti Gupta, thanks so much for your time this morning. It's good to see you.
The biggest stories the moment they happen from around the globe. Subscribe to Bloomberg Quick Take now for insight in an instant.